It is the day before Thanksgiving, and let me begin by wishing everybody a very nice Thanksgiving. I hope you have a great day tomorrow. Watch a little football and have a really nice meal with your loved ones. I certainly will try to follow that recipe. In the stock market, we're having a down day, but we're having a terrific November. So I'm not going to complain about today. I'm also not going to complain about how Zoom is up today, 2.16%. In fact, I wanted to share with you my reasons why I own Zoom as a stock and why I will continue to hold this stock. I think it has a lot of upside. I'd like to explain the reasons for it. First and foremost, Zoom over the past year is up nicely about 32%, but it's really been a stock that was severely sold off from the pandemic days when it was flying high. It got a little too rich, but looking at the company, they're much larger than they were 3 years ago, yet their stock is really traded down. And I think it's a really strong value stock with margins above 70%. Gross margins are really, really fabulous over at Zoom. They also have tremendous free cash flow. That is awesome. I think this is a perfect takeover target for a big business to come in and buy this $26 billion company and snatch them up and take over all that free cash flow. The company is growing. They're number one in video conferencing. They have the best user experience for users. So I think the company has a very good product. It's a good business, and they continue to grow. They're especially growing with big businesses using a lot of seats of Zoom software. So that looks really good. The PE this year is 28, but next year it's going to drop to 16. Really attractive PE. Analysts think it's fairly priced, even though it's really run up over the last couple of months. It's up really nicely. It's up 32% for the year, but man, over the last month alone, it's up 17%. So it's really caught attention of the marketplace, and a lot of investors are going into small cap stocks, and I think Zoom is the beneficiary of that trend. Looking at their revenue, they've been growing slowly over the last couple of years, and over the quarterly, they continue to grow, accelerating their growth just a tiny bit. Now, 3.59% is nothing to write home about. I agree, but they continue to grow. The piece that really is impressive is their gross margin of 76%. That is excellent gross margin rate. And their free cash flow rate is also excellent. So they're generating free cash flow, very profitable in a space that they are the leader. 23 analysts cover this stock on Stock Analysis, and they're split on the future of Zoom stock price. Some believe it's going to go up quite nicely to $115 per share, and some believe it's going to go down to $60 per share. The downside risk doesn't look too bad, and the upside risk is really nice. Now, on average, it's probably fairly priced according to these analysts. They believe the company is going to be nice and profitable over the next couple of years. Their profit isn't going to grow a whole lot, but it should really stabilize at that level. Not too long ago, they were just struggling to be profitable at all. Now, two analysts, and I would say hedge fund managers from the Compound, had comments on Zoom that I'd like to share with you. The Compound is a YouTube channel that I do watch. I have a lot of respect for those guys. One of them, Josh Brown, really respected guy. And listen to what they have to say on Zoom.
So they just reported earnings and the stock fell 5%, but it's still well within its uptrend. And I wouldn't be surprised if it reverses higher. Very slow growth, but growth nonetheless. What are you showing us here?
DocuSign is not one of our top 10 holdings. I definitely used to be. Let me see the full holdings. All right. So what we're showing here is Zoom is not really growing that much, but maybe it's good enough. Total revenue is up 4%. Their enterprise, like their giant contracts, what does that say? Up 8%. They have a 98% retention rate for the larger clients, the customers that are over 100K. Not bad. So I own Zoom. I bought
192,000 enterprise customers is a big company.
Yeah, it's just not growing that much because everybody bought it in 2020 and 2021. So look next chart. Let's look at some of the valuation compression. So this was the dumbest stock in hindsight in the pandemic. It was bigger than Exxon. This is the price to sales ratio hit 120. Next chart, please. It's now down to 5.6. This is just zoomed in a little bit. So the excess has clearly been washed out. The stock has been working. I bought it and I sold it before the recent rally, which was fun. But I bought it. Yeah, it happens. You know what?
I've done it
because, dude, we're in a bull market. It's the only stock that I own that's not working. Get out of here.
I was in this stock earlier this year, and I didn't make any money. I sold at break even.
So it happens. So I bought Zoom 2 days ago. on the dip and the snapback. So yeah, I own Zoom. So there you go.
A couple of people in the chat are saying that Zoom and DocuSign should merge. I said that 2 years
Oh,
ago.
I don't hate that.
When these
Yeah.
stocks were at all-time lows. They're very complementary. We actually use Zoom as a company,
Yeah.
and I talked about this on CNBC today. They provide our phones and text messaging for our entire firm, and they archive all our texts, which is a regulation in the investment business. And people think that it's the video business and they're just competing with Teams and Google Meet. No, they're selling software into the enterprise that does a lot of other things, and video is just now a part of it. In fact, they just said today they're changing the name from Zoom Video Communications to Zoom Communications. The corporate name. So
DocuSign chart looks incredible. I won't buy it. That's why it's going higher. There's a big fat gap all the way up at 165, which is a double from here. So for the longs, I hope it works. But yeah, it looks great.
DocuSign's going higher, but I think I would buy Zoom. I think I want to see if it's going to come close to retesting that 50-day.
Yeah.
Which
well,
is,
here's the deal.
74.
Zoom just reported earnings today. It wasn't great, but it got bought up at the end of the day. We'll see. It's just one day. DocuSign has earnings next week, and given that the stock just ran from 60 to 90, basically, maybe it's got some give back. Who knows? We'll see.
Yeah.
Right.
Which one would you pull the trigger on right now?
I own Zoom. I bought it this week, so that's
you're back in it.
I bought it. I bought it 2 days ago.
Okay, good answer. I think that's the one that I would do too.
When I do my valuation on Zoom and look at their free cash flows, also their earnings per share, I get to a 51% discount on the stock. Main reason is their cash flows are so strong. They're almost a $2 billion free cash flow generating company. I'm taking a look at their year to date, annualizing the number, and then just adding 5%. When I take those cash flows for the first 4 years, just growing at 5% and then growing terminally 4%, then discounting them by 9% discount rate, I get to $37 billion of value there. At about $7 billion of free cash they have on the balance sheet, we get to $44 billion in value, but the company only has a market cap of $27 billion. So the cash flows are really going to drive a lot of value. And I believe just on cash flow basis, they're discounted by 69%. Earnings per share is closer to their current stock price at a 16% discount. So when I combine the two, putting more weight in the free cash flow method, I establish a 51% discount on Zoom. Really attractive discount on this really good company. Zoom is a very desirable business for me. I put them in mostly in the green quadrant of most desirable businesses that I like to look for, and some in the gray, because they do have competition from Microsoft, who has their application for video conferencing, as well as Google and others have apps. But Zoom is the leader. I like what they're doing with AI. They're having AI companions that are selling really well, 59% growth in the AI product sets. They also have new applications for call center software that call centers can use with Zoom, which is a very good area of expansion for them. So overall, I like Zoom. It provides a really nice discount. I'm going to be holding my shares of Zoom. I've got a pretty good investment in them. The value of my shares are $44,692. I invested $35,000 to have those shares. So I've got a nice gain, but I think it could really go up higher, especially if another bigger software company comes into the picture and acquires Zoom. So that's my video on Zoom. I hope you found it interesting. And again, let me wish you happy holidays and thank you for watching.